Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu. We've got longtime fools Travis Hoium and Rick Munarriz giving a 1 to 10 rating to a company that I still can't believe is around $100 billion in market cap. It's DoorDash, ticker symbol DASH. Talk about the strength of DoorDash's business, including factors like industry and competition. 10 is invincible. A 1 is hopeless. Both of you are at 7s, Travis.
Yeah, I got to go pretty high here. Couldn't go 10 because we're not invincible with DoorDash. But this is an aggregation business. Basically, what app or website are people choosing to go to? The two big players here are going to be Uber and DoorDash. DoorDash has done a phenomenal job moving beyond just food. And, and maybe they've had a lot of these things for quite a while. But I know I have found myself moving to all kinds of new products. I've bought stuff from Home Depot. You can get adult beverages. I'm getting groceries every once in a while from DoorDash. So it's really become a go-to place. And I think that's why you get the valuation that you have. And that's where you want to be, as an aggregator in an internet economy. So got to go pretty high. But it isn't invisible because there's plenty of competition out there.
Yeah, so like Travis, I'm at a 7 here. Unless you're DoorDash or Uber Eats, this is a cutthroat business. Many of the weaker players have buckled. The lucky ones have been acquired. DoorDash is the leader. In Breaking Bad parlance, figuratively and literally, it is the one who knocks. It's still shopping, also in more ways than one. A couple months ago, it acquired Deliveroo in the UK, giving it some international ammo, as well as Open Table rival 7 Rooms. Right now, the business is closer to an 8. But I want to be cautious here because I don't know if it can weather an economic downturn when consumers will return to favoring value over convenience.
I didn't know that DoorDash did Home Depot. It looks like it's in lots of cities. I'm not sure if I've got it yet or not, but I might be looking because I could just definitely see that. You're in a home project. You're like, got to go for the 5th time to go get something.
We had a plumber here yesterday. I said, you got to just DoorDash these parts instead of going to Home Depot, twice a day.
Yeah, I like it. All right. Well, let's move on to management. A 10 is Warren Buffett. A 1 is Homer Simpson. Rick's at an 8. Travis, you're at a 6.
Yeah, I would go higher here. I'll let Rick take the kind of bullish position. But this is a $100 billion business that's very well established and barely makes money. $338 million worth in net income over the past year. They pushed their prices and fees so much higher. I mean, if you order something like Chipotle, you're going to pay significantly more on DoorDash, not only in their fees, but the burrito itself is going to be more expensive. So I don't know how much further they can push the business to actually squeeze profitability out of it. So if you're this well established and you're not making that much money, that just makes me worry about what they're going to do to make the business more profitable in the future, get fit, if you will. I also don't know what they're doing with autonomy. So as companies like Uber and Lyft establish themselves and sort of build a strategy for autonomy, DoorDash has got to be a leader in that space or they're going to get run over by everybody else. So that's why I just can't go too high here.
Yeah, so co-founder CEO Tony Xu has been at the helm for a dozen years. I love how the CFO and COO both left executive roles at Uber and Uber Eats in 2018 and immediately jumped into DoorDash. It's not just that they have experience at both companies, which is great with these two guys. It's also a testament to the appeal of DoorDash. If the head of strategic finance at Uber and the head of finance at Uber Eats decide to switch teams.
For financials, a 10 is a fortress, a 1 is yikes. Rick's at an 8. Travis, you're at a 6.
Yeah, great balance sheet, $6 billion worth of cash, but operating margins are a pretty anemic 2.5%. And, like I said before, I don't know how much they can push those margins higher given the costs that they have in the business. And so that may just limit their opportunity for profitability in the future.
Yeah, and I was skeptical at first, and there's a good chance that you probably had your doubts too when the DoorDash model popped up. When the pandemic happened, of course, we were going to pay a premium to in-restaurant pricing on top of DoorDash fees and driver gratuities. But revenue has more than doubled through the first few quarters after the pandemic. It did double over the first few quarters, but it keeps growing. A lot of the initial pandemic plays have ugly stock charts as peaking in 2021, but DoorDash has clawed its way back there. And it's earned it. Quarterly revenue growth has been at least 20% ever since. The balance sheet is a beaut with all this money and no long-term debt outside of its lease obligations. So, yeah, I went with an 8.
All right, Rick, let's move on to valuation. How well will DoorDash's stock do over the next 5 years? And how safe is it? 10's a sure thing. 1's a lottery ticket.
Yeah, so I'm at 5 to 10% on the returns and safety score of 6. DoorDash's business, it went from being deficit saddled and promotional in 2020 to somewhat profitable today. There's just no sugarcoating. It's sugar-coated valuation right now, though. The valuation is as inflated as your DoorDash receipt can be sometimes. It trades at a revenue multiple that is more than double Uber, and its forward earnings multiple is more than triple Uber. So I get the valuation argument. It's stiff, and the long-term vulnerability of the business is still has me a little cautious, but it's why I went for a 6, even though this is a cash pinata balance sheet.
Yeah, I got to set the expectations really low. I went to 0 to 5. Safety score is 6. And it's just because you're paying for a lot of growth already. Rick mentioned the growth rate is really, really good. It's really great to have a 20+% growth rate. But you're paying 8 times sales for a very low margin business. The price to earnings multiple is over 300. Now, we're barely profitable, so maybe that isn't the best metric to look at. But I just really hesitate to think that DoorDash is going to keep the multiples that it has over the next 5 years as it grows into the current valuation. So that's why I set those expectations pretty low for the stock.
Time for everyone's favorite topic. Rick, is there a company in DoorDash's space you like better?
Yeah, so I'm going to go with Uber. And to me, DoorDash, they're dominating their market. But you've had Uber, even Instacart these days. They're all doing restaurant delivery things now. Instacart through Uber. So it is the kind of thing where Uber has, obviously, the ride share is their biggest business. But to me, Uber is very well-rounded. It's not just based on basically dealing with restaurant deliveries and shop deliveries. I love the whole fact that there's a whole transportation angle, which is what most people still know Uber for. And it's been a cash flow monster over the years. So I'm going with Uber.
Yeah, I own shares of Uber, but the one that I like even better right now, based on their growth, based on their valuation, is Lyft. Lyft, we talked about DoorDash, trades for over 8 times sales. Lyft trades for less than 1 time sales. Their price to earnings multiple on a forward basis is about 12.5. So I think you're getting really good value. Their management has really focused that team, continues to be a growth company. And I think they have the right autonomous strategy. I think that's the other thing is we may look back 10 years from now and see Lyft as a leading aggregator of demand in autonomy. They're actually a DoorDash partner as well. So I think that's a better value play in this space.
Thanks to both Travis and to Rick. They've given DoorDash a meh overall score of 6.2 out of 10. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Walmart. Till then, Fool on.
I mean, they're at 2 brokers ago is how long,
that's a great
how long
way.
ago I bought it.
That's almost as good as a Spiffy Pop. Yep, got to 3 brokers.